AMC down 16.5%. So you know what time it is? It's time to buy the damn dip. And that's exactly what I'm going to do right now for you guys. If you guys want to join public and send your orders to the lit exchanges, sign up for public. Very easy to do, to send your orders in like I just did. Just bought some more AMC. There you go. We have it right there. First round of buying this crazy dip. This is a wild dip, guys. I did not expect this. I did not see this coming. We're ultimately setting up for a big bounce. But what I want to go over here in this video is an intraday update. What is going on with the ortex data? Really, what is going on? What is causing this move? Because it comes down to the option chain. A lot of short activity as well as spoofing and short ladder attacks. So let's break down all of this information. Hit that like button for me if you guys are buying the dip. Let me know if you are buying the dip down below in the comment section as well. But if you hit that like button, I'm gonna assume that you are buying the dip. Consider subscribing to the channel and check out the link down below in the description if you guys want to buy AMC. Send your orders to the lit exchanges and help out the movement on a day when AMC could use all of the extra help it can get. So let's dive into it, guys. AMC down, like I said, about 16.5%. We were just down over 17%, but we did see a little bounce. If we pull this out to really the 1 minute candlestick chart, you guys can see this little bounce. We did hit our low of the day at $22.53. By the time you guys see this, we could have bounced up a lot, or we could have sold off even more. What I want you guys to know is, remember the other day, about 2 weeks ago, we were down 16%. We seen a hard bounce at the end of the day, closing down only 4%. So it is very possible by the end of the day, we could see a slight drop on the day. We recovered 12% the last time around. So I do expect something along those lines, just because of how oversold we are. Now, I'm not saying, I'm not going to go out on a limb and just guess to you guys and say we are going to see that again, but I'm saying it would not surprise me to see that. Now, let's take a look at the volume, the moving averages, support, and resistance, the only things that matter when you're looking at technical analysis. And we're already at 42.9 million for volume. This is showing you guys there's a lot of short activity. There's a lot of puts that are in the money. They have to be heads for by this Friday. So that is obviously giving us a lot of selling power as well. But this is really spoofing and short ladder attacks. Short ladder attacks, in short, is in the beginning of the day and at the end of the day. The market makers, hedge funds, institutions can flood the market with these sell orders, selling stock short, and manipulate that price throughout the rest of the day, cause fear into the stock, and to get people to not buy the stock as heavy. Because like I said in the last video, what really moves a stock, it comes down to who is willing to buy a stock at a rapid rate, right? If people are willing to just pay more and more and more for the stock goes up. Same thing to the downside. If there's a lot of people that want to sell their stock immediately or really fast, or short selling their stock as fast as they can into the open markets, you see this stock move down at a rapid rate. It doesn't necessarily mean that people that are holding onto the stock, or apes that have been holding onto the stock, are actually selling. That is a huge misconception that I want to really get across here today in this video. That's not happening. I don't think apes are selling out of their positions just because we're down 16%. And I'm not trying to be a cheerleader here. Do whatever you guys want to do. I am not your financial advisor. I am doing what I want to do, and as so should you guys do what you want to do. But I think it's pretty clear that AMC is a trade that I want to be a part of, just to say the least. I think a lot of people feel that way as well. And patience pays in due time, or patience, I should say, pays in due time. Now, as far as the support levels, we're really in this range between, we just broke under our support level at $26.50 per share, and we're currently at $23.05 per share. But our next support level is at $20 per share. So we still have a $3 drop before we really do hit that next support level. Just for, you know, what we're seeing right now, I would watch $22.50 to see if we stay above that, if we do bounce. I'm not going to hold too much. I'm not going to hold my hat on it, my Santa hat that's not bringing us any good luck since I started wearing it. But still, watch that level to see if we do get a bounce right here. The overall markets are selling off pretty hard. GME down 12.77% as well. So it's not just AMC. If you guys take a look at my portfolio, want to see something funny? down 8.18%. Everything is getting clapped today. Affirm down about 5%, Lucid 1.7, Teladoc 2.35, SoFi down 5.5%, DraftKings down 5.5%, AMC right there, a little 100 share position down almost 16%. Everything is down. I have one stock that is up, and that is Abivine, and that is hitting all-time highs because it is a part of the sector of the economy that can pass prices on to consumers in times of high inflation. And when the Fed tightens, these kind of stocks actually do well. Food companies, gas companies that can pass that cost on to consumers instead of having their margins get hit. So you're also seeing just a sector-wide shorting happening today. We have been seeing that for a while, but still thought it was pretty funny. I'd show you guys I'm getting clapped today on all of my portfolios. This is not even my largest portfolio, and I'm getting clapped on it. So there's a lot of pain out there today, to say the least. Now, let's go over the Stonk tracker data, and then let's kind of talk about what this means continuing on throughout the next couple of weeks, throughout the Santa Claus rally that we may or may not be getting, and the Fed meeting tomorrow and on Wednesday. And geez, today is such a bad day. We are seeing 142,527 puts that are currently in the money, expiring this Friday. Now that it is Monday, we have a very low days to actual expiration. So if these puts were not fully hedged for, you're seeing a lot of hedging going on today to fully hedge for these puts, or I shouldn't say fully, but hedge for a majority of these puts, because a lot of these, the $30, even the $25, they have to be hedged for a lot so the market makers don't lose a lot of money. Now, if these bounce, you will also see a rapid de-hedging situation that will happen. So this will set us up for a possible big bounce here in the next couple of days. After the Fed meeting, we're going to get that red light or green light. Red light is going to be stop anything risky, short everything risky, and all mid caps. The green light, which I think is the most likely situation, especially after today's sell-off, is going to be de-hedge all of your short positions. You're going to see a lot of buying activity. People are going to be bullish in the marketplace. We will know that sentiment after the Fed meeting on Wednesday, and most importantly on Thursday and Friday. All in all, these puts control about 14.2 million shares that have to be hedged for, and that is just shorting that will happen in the broad markets leading into Friday. I think some of this was done last week. I think a majority of this is being done today. And on the flip side, you're seeing virtually no hedging that has to happen for the calls. 1.3 million shares that will have to be hedged for. It is just not a good situation, the call to put ratio. But like I said, that brings us into a huge possible bounce by the end of the week. January 21st, 2022. It's a little bit far out to be talking about this, but we've been very excited for this. You're also seeing 81,000 puts that are in the money, 106,000 calls that are in the money. And this has definitely been weighed towards the call side for this expiration. And I do think a lot of people are going to take that opportunity, if you trade options, to be buying these cheap options today, and if we continue to sell off. So that is the situation. I continue to buy the dip. I do expect a decent bounce. I wouldn't go as far as to say today, like I said, but throughout the rest of the week due to the data that we are getting. And like I said, with the short interest and the ortex data, we're looking at 18.73% short interest of free float, 96 million shares that are sold short currently. So days to cover still incredibly high, something to be bullish about. All of this information is bullish if you are a real ape. You're holding your shares, you're buying the dip like I just showed you guys I am, and I continue to keep buying the dip. So I hope you guys are just as excited as I am. Opportunity, volatility, well, volatility equals opportunity. No matter what it is, no matter what you're trading, calls, puts, all of it, AMC, all of it. So I'm getting clapped. We're all getting clapped. Hallelujah to that. Let's buy the dip. I'll see you guys. Love you guys. Thank you for watching. I'll see you in the next video.